Hello and welcome to our discussion of the case study Telenor Revolutionizing Retail Banking in Serbia Digital Transformation of the Customer Experience. Telenor is a Norwegian multinational telecommunications provider. In 2013, Telenor started a plan to enter the retail banking industry in Serbia. Serbia just had gone through recession after a long period of strong economic growth. After the recession, Serbia's economy was starting to pick up. Serbia had liberalized the economy and resolved a number of key political issues. Serbia was now planning to become a member of European Union. Telenor thought it was the ideal time to expand its business portfolio. Telenor was planning to get into mobile banking industry in Serbia. Martin Navratil is the future CEO of Telenor Banka Serbia. He had experience in banking. He was hired to lead this move into mobile banking. His first task was to make a study of the mobile banking sector. His bosses expected him to put together a plan that would revolutionize Serbia's retail banking market. At the outset, he had two main challenges. 1. To decide what type of financial service should be launched. There were many options such as A. A mobile payment service. B. A mobile-only service. C. A full retail bank. 2. To formulate a strategy. To develop a strategy, he considered many things such as A. Positioning the service, with a clear value proposition. B. The market segment to go after. C. Whether to leverage the Telenor brand. D. Developing an outstanding mobile application. E. Product, pricing and communication. F. And whether to open bank branches. The priorities of Navratil were 1. Ensure that his plan will be self-sustaining and minimize any risk to the Telenor brand. 2. Ensure that his plan is cost-effective and succeed in both the short and the long term. He eventually came up with a short-term plan that combined all of these considerations. First, he created a positioning focused on the customer and her banking needs. Second, he segmented the market horizontally and vertically. This segmentation targeted potential customers using various criteria. For example, which customers already have smartphones and were more attractive choice for mobile banking. Third, he decided to leverage the Telenor. The equity of Telenor brand was very strong. Telenor was trusted by consumers in Serbia. Fourth, he considered development of an outstanding mobile application. Fifth, he chose simple product offerings in which payment transactions were charged individually. Sixth, he decided not to invest in branches. Regulatory considerations were minimal in this plan. This was because Telenor had acquired an existing bank, KBC. Telenor acquired KBC Bank to obtain a banking license but did not keep its customers. Telenor thought that, in long term, the bank will be able to count on satisfied consumers to popularize its services by word of mouth. As the bank gradually increases its offerings, such as making loans, it will require closer involvement with government regulators. The following are the teaching objectives of this case study. 1. How to evaluate the attractiveness of a new business idea. 2. How digital disruption can affect aspects of the value chain. 3. How cutting-edge digital megatrends are changing the way companies do business. 4. The challenges and opportunities of brand positioning and brand extension in a digital world. 5. How to communicate an innovative mobile offering in a new market. 6. The power of community building and influencer marketing. 7. Unconventional product and pricing tactics. The following are the assignment questions of this case study. We shall discuss these questions in our analysis of this case study. 1. Should Telenor offer financial services in retail banking in Serbia? If it does, what strategic type of financial services, that is, payment services versus being a mobile or full retail bank? What are the risks and the opportunities? 2. Which of the 6 segments should Telenor target? Are there potential subsegments within the attitudinal segments? 3. What could the brand positioning look like? What brand pillars should Telenor focus on? 4. Should Telenor leverage its brand or come up with a new brand to avoid the risk of brand dilution? Before we start our analysis of this case study, it is important to understand the phenomenon of digital disruption. Digital disruption is a transformation that is caused by emerging digital technologies and business models. These innovative new technologies and models can impact the value of existing products and services offered in the industry. This is why the term disruption is used. Because the emergence of these new digital products/services/businesses disrupts the current market and causes the need for re-evaluation. An example of digital disruption is Kodak cameras. Kodak were one of the first to introduce cameras to the mainstream market. They monopolized the markets for the majority of the 20th century. Unfortunately, Kodak failed to keep up with the changing identities, needs, and expectations of their customers. Kodak original target consumers were female. With the emergence of digital cameras, a completely new market of male photographers emerged. Some clever marketing from other digital technology brands led to changes in consumer perceptions. This marketing also created a new need for photographic gadgets. This allowed brands such as Sony and Canon to step in and capture the market with their new technologies and approaches. Kodak fought the change for as long as they could. Despite rapidly losing market share, Kodak did not accept the inevitable force of digital disruption. In 2012, Kodak eventually declared bankruptcy. Now let's consider, how does digital disruption impact businesses? The lesson we can learn from Kodak is that digital disruption is an unstoppable force. A business cannot try to fight the force of digital disruption. But what businesses can do is embrace digital disruption, even plan for it. Businesses should keep an eye on emerging signs of digital disruption in their industry. This way they can get ahead of the game and work with the flow rather than against it. This can prevent the damage digital disruption can cause to your business. This can also lead to further growth and new opportunities for the business. Digital disruption typically results in changes in consumer needs. If a business keeps an eye on digital disruption occurring in its industry, the business can be in a position to fulfill these emerging needs, keep existing customers happy and open up opportunities for new customers to find what they need. Since this case study talks about banking industry, so it is important to understand how the digital disruption is affecting banking industry. In banking industry, the process of digitalization has been challenging banks and financial institutions for more than 2 decades. Some of the biggest changes they face today include the unification of digital systems, the automation of processes, and the establishment of efficient means to comply with regulations. Digital platforms are now a crucial mechanism for engaging with both existing and potential customers. Social networks have become important tools for sales, marketing, and communication. Digital platforms also facilitate banks and financial institutions' global operations, regardless of their geographic location, via cutting-edge software and automation systems. Telenor is taking advantage of digital disruption by leveraging all latest technologies and trends. These include increased mobile usage, big data, social media, community building, augmented reality, and artificial intelligence. Here we shall discuss various options that Telenor is considering. We shall discuss these options as arguments. First argument: Telenor should stick to its core competencies. One can say that Telenor doesn't have the skills to launch a bank, whether mobile only or with branches. Market is highly regulated. Telenor will need a license if it wants to offer more than just peer-to-peer solutions and m-payment services that it offers in other countries. Therefore, what Telenor should do is that Telenor should simply provide additional services for the 30 banks already in the market. This would help avoid the hassle of getting a license. Telenor can simply pick and choose the banks it wants to work with. Second argument, Telenor should launch an innovative banking solution targeting the right segment. One can say that 30 banks mean it is a very fragmented market. Current banking services are slow, inconvenient, and hard to access. Banks are not customer-focused and offer antiquated, traditional services. This is not what young, upwardly mobile consumers want. Serbia is coming out of recession and has strong economic growth. Before we decide to take one of these options, a few important questions need to be answered. 1. Does Telenor want its new service to be profitable? 2. Does Telenor want to offer banking services as a standalone business, or is it a way to get more customers for its telecommunication products? If Telenor wants to be profitable, it must offer payment solutions and loans at some point. These products would require a banking license. What if Telenor applies for a banking license? Well, it will take time to get this license in Serbia. Question here is that what are Telenor objectives? Telenor wanted to enter the banking market to create a profitable standalone business that is better than all the other offerings available in Serbia. Telenor also wanted this venture to be profitable quickly. Telenor hired Navratil to create a profitable bank within 5 to 7 years and revolutionize retail banking in Serbia. If Telenor succeeds in its plan, there will be no need for Telenor to become a service provider or a peer-to-peer lender. Your assignment here is to think and list some of the risks and opportunities of each strategic option, that is, become a profitable bank, become a service provider, or become a peer-to-peer lender. Here we will discuss, which of the 6 segments should Telenor target? An important question here is what variables could be used to segment the banking market in Serbia. The second question is what are the pros and cons of each, for example strategic versus tactic, actionable versus non-actionable. For Telenor, a number of different segmentation strategies were available. Before making a decision, Telenor must first think about all the other questions at the same time. These questions include brand strategy, products, channels, etc. The decision about segmenting is also based on the business model. People may support the option that Telenor should just be a payment service provider or a peer-to-peer lending provider. These people may argue that using this option means there is no risk to using the Telenor brand. Telenor could target every customer that is interested in that service and scale the business right from the beginning. People may argue that Telenor should become a full retail bank. That means Telenor should go after the biggest segment, segment 5. Another important consideration here is segment size. Should Telenor scale the business and go after many customers or target a small segment? Suppose Telenor go after segment 5, the biggest segment. An important question here is what could be some potential challenges. To answer this question, we should look at the perceptual maps in the appendix of the case. If we look at Exhibit 7 on page 20 of the case, we see that reputation, security, and safety is a very important aspect for people within segment 5. The Exhibit 6 of the case shows that kindness and competence of staff is very important as well when describing the experience as a bank client. This indicates that a mobile-only bank is not an option if you want to go for the biggest segment 5. Also note that in segment 5, only 38% of the people own a smartphone. Finally, because reputation is important for them as well, Telenor should not create a new brand but leverage its own brand reputation. However, this means there will be a risk of brand dilution. This risk will be higher if Telenor goes for a big segment. Some people may argue that Telenor should go for segment 6. They would argue that segment 6 is very small and 71% own a smartphone. They would argue that Telenor should test a new mobile offering on this segment. If this new mobile offering is successful, Telenor could roll it to other segments. Telenor could also stop it to avoid any risk of brand dilution. avoiding brand dilution is very important. Telenor senior executives in Norway see brand dilution as the key risk. At this point, the question of the difference between segments 3 and 6 arises. Apparently, both segments look extremely similar in terms of general attitudes and perceptions. Customers in both segments would use loans, like risky investments, like challenges or adventure, etc. However, if we carefully examine the perceptual maps shown in Exhibit 5 on page 10 of the case study, we see their personal values are different. Your assignment here is to go through the case study and list and explain the major differences between customers of segments 3 and 6. Telenor needed a segment that gives money, that is, saves, and one that needs money, borrows. For this reason, Telenor decided to go with segment 1, savers, and segments 3 and 6, loan seekers. The principal advantage of a full retail bank is that the market would be much bigger. Segment 5 would have been an obvious segment to choose. Ultimately, Telenor chose to focus exclusively on mobiles in the beginning, which limited the potential market but minimized risk. By opting for mobile only, it made clear Telenor was focusing on customers who were likely to love mobile banking. Telenor wanted to leverage the brand for this new market entry. Risk minimization was especially important. Other segments could have been interesting. Segment 5 was the biggest, urban, and had a low penetration of mobile phones. However, the risk of brand dilution was too high for segment 5. Segments 1, 3 and 6 were not too big. If the offering didn't work out, the brand dilution would have been minimal. To minimize the risk even further, Telenor decided to focus on mobile only. In order to discuss brand positioning, we shall first need to understand the pillars of positioning strategy. The first pillar for the positioning strategy is to define what the offering actually is. The second pillar of positioning strategy is to explain how this new offering makes Telenor unique and differentiates it from the competition. This discussion should tie into the segmentation strategy. Good answers should refer to associations with the needs of the segments chosen. How Telenor can convince their customers that a telecommunications provider can offer financial services they can trust. This is what we discuss in the next section. Now let's move on to the last part of our case analysis. This part deals with whether Telenor should leverage its brand. Trust is critically important for banking customers in Serbia. The economy is still recovering from the events of the 1990s. To ensure consumers trust a telecommunication company for their financial needs, Telenor decided to leverage the Telenor brand. The trade-off between there is great potential and the risk of diluting the brand was clear. The most important revenue stream for Telenor was telco business and should be protected. Telenor wanted to have a quick and cheap exit option from banking. Therefore, Telenor focused on mobile-only option. Note that answer to this question is closely related to our answer to the question about customer segment choices and first question about strategic focus. By focusing exclusively on mobile, Telenor concentrated on subsegments within segments 1, 3 and 6. This decision lowered the risk of failure and brand dilution because only tech-savvy people would sign up. This decision also impacted brand positioning and the brand pillars that Telenor could leverage. Telenor thought that its new offering would almost certainly have failed if offered under a new brand. This was because Telenor would need to build awareness and reputation from scratch in a market with 30 competitors. In Serbia, Telenor was widely known as a very reliable network. There was very high awareness as well as very good brand equity. From the beginning, it was apparent that Telenor was thinking to leverage its brand. Here the question is, what would be the risk of brand dilution if it did not work out? The answer to this question is also linked to the other questions. Telenor combined a small, tech-savvy customer segment with a great mobile app and strong positioning. Telenor ensured that customers would almost certainly love the brand and the product. Telenor did everything to ensure that the mobile app was not just good but outstanding. because this was the only customer touchpoint. Also, hiring the right people and collaborating with the right firms were critically important. Telenor product was spot on for the target segments. Customer loved it and enthusiastically promoted it by word of mouth.